If you invested $1,000 in Bitcoin 10 years ago, it would now be worth almost $500,000. You don't get that kind of return on many investments, but is it too late for you to buy in?
I think the risk we have at the moment is that lots of consumers are basically buying Bitcoin, perhaps without a full understanding of the risk, without a full understanding of why they're doing it.
If investors really want access to crypto, the easiest and best way to do it is to buy and hold for the long term.
Digital currencies like Bitcoin, which is still dominant, started circulating back in 2009 as an alternative payment system, rather than the investment vehicle they've become. They've operated largely outside traditional banking, with no central authority to govern their supply, and their value depends entirely on people's confidence in them.
Essentially, investors don't trust governments anymore as a store of value, and so we're not holding currencies or government debt the same way. And we as an investment firm, and I manage $4 billion, we don't look at owning government securities like we used to when I was growing up. So we look for alternative assets.
Some people think that, I guess, Bitcoin and crypto could be the monetary base for a more digital future. The difficulty with that is that it is so volatile. So there's a kind of basic issue here, which is that if you're a business and you want to get paid by a customer, if you facilitate that in Bitcoin, well, the price of what you're actually selling could be fluctuating around quite a lot depending on what the price of Bitcoin is.
If investors really want access to crypto, the easiest and best way to do it is to buy and hold for the long term, because that's really the way I've made so much money in crypto.
It seems to be a pretty risky bet. It seems to move in tandem with risk assets, and it's definitely not something that's safe to invest in if you want low volatility.
Holding on to crypto does require nerves of steel. It might have more than doubled last year, but in 2022 it lost 2/3 of its value.
I think the risk we have at the moment is that lots of consumers are basically buying Bitcoin, perhaps without a full understanding of the risk, without a full understanding of why they're doing it, and they're also bypassing traditional investments.
Bitcoin will go down when things get bad. So it correlates to risk. And this is what we try to teach people. When you own Bitcoin, when people are feeling good about taking risk, Bitcoin goes up. But when they're scared of risk, Bitcoin goes down. Bitcoin is a volatile investment that has a lot of potential because people are adopting it as a store of value, but it doesn't mean it's going to behave like gold, where gold actually rallies when things get bad.
Retail investors have been riding the roller coaster for years, but now some of the world's biggest banks and financial institutions are buying in. The reason? The rules have changed in the US.
When the SEC was dealing with Bitcoin before the Trump administration, they basically looked at it as a scam that they were trying to, deal with or regulate, and they really didn't like cryptocurrencies. So the fundamental basis around regulation was negative.
Of course, Donald Trump is a big fan of crypto nowadays, and has been helping push the agenda as well.
Hello, Bitcoiners. And so they've adjusted the regulatory framework around crypto to basically complete acceptance of everything. So, I don't know if that's the best solution for now. And I always say, buyer beware.
I think that does potentially add another risk to the Bitcoin story as well, because like it or not, crypto is now partly a trade which is affiliated with the current presidential administration in the US. And as we get towards potentially the end of that administration, people might start asking questions about what that means for crypto.
One of the reasons why Bitcoin has grown so much in value over the last several years is because of institutional investment in Bitcoin. So if you go back 5 years ago, we were early adopters of Bitcoin, and at our firm actually selling Bitcoin to clients early on. And, at that time, the major institutions, including BlackRock, who are now making a fortune off Bitcoin, basically poo-pooed it as a scam or Ponzi scheme. And, now 5 years later, these are the biggest players in Bitcoin.
What those institutions are doing is offering new ways to buy crypto, like exchange-traded funds. That means you don't actually own the Bitcoin itself. Some companies like Strategy have gone further. That's a publicly traded company that buys Bitcoin and issues shares. That could be a problem if Bitcoin falls.
In some cases, you've got people buying these things, for highly inflated prices, much more than the value of the Bitcoin that they hold. But definitely, adding leverage onto Bitcoin is extremely risky.
It's very possible that Strategy could walk into that problem if Bitcoin declined and stayed low for a long period of time, and then they were forced to pay back their loans with cash, for example. They would have to sell their Bitcoin.
Both the rides up and the rides down can be very sharp, and in a way it kind of becomes, its own kind of self-fulfilling momentum machine. So if you get people seeing that the value of their Bitcoin is falling, they might sell out, thereby creating further downdrafts in the price of Bitcoin, and it just becomes a bit of a snowball.